This process what I'm about to do is called bank reconciliation. Now technically it's on the course, but it only ever appears as an actual question, a full question in its own right in the ordinary level. So for higher level, we don't have to worry too much about it, except for the fact that can appear as one of these adjustments. So basically what we're doing is we're trying to compare our version of the bank account with the bank's version. So the bank, we're going to call it the bank statement. So those two figures, the two documents should be the same, but because they're both dealing with my money, the same amount of money. But there's a difference between them, and what we need to do is we need to make the two numbers agree so we have the correct figure for bank. And if we have made any mistakes that we find out about when we read our bank statement, we find out, oh yeah, there's something in the bank statement that we weren't aware of, a bill was paid by direct debit, we forgot about that. Well, then we need to change our accounts. But if the bank was wrong, if the statement was wrong, then we don't need to change anything because our records were done correctly. So our bank statement showed an overdraft of 32. So I'm going to put in 32 minus, that's the figure the bank has. So what do we have? Let's just go back up here. So we've got a figure in the bank of 48,800. So that's a minus number. So our version says 48,800. Now, we go through each of these one at a time and see, well, who's wrong, me or the bank? I need to fix whichever document. So credit transfer received as part of so credit transfer, just so we understand, is when money is paid directly into my bank statement. Okay, I wasn't aware of it. No entry was made in the books to reflect this, so I need to go and fix it. So credit transfer of 1,000 means I receive 1,000 money. So I'm going to add 1,000 to the figure that I have already, and down the bottom I'm going to do the adjustments. So why did I receive 1,000? Happened at the end of the year. So there's a debt written off as bad, so I'm going to have bad debts. I'm going to have debtors because they're the ones who don't have to cancel, and then the other entry is going to be bank. So the debt of 1,500 was written off as previously written off as bad. So that means I would have had an expense of bad debt before. So that expense I'm going to have to cancel. So I'm going to reduce my bad debt expense by 1,500. So that means the remaining 500 is going to be added to my debtors. Okay, because now I'm going to receive that money that I didn't expect to receive. So let's go, and I haven't done any adjustments to my debtors so far, so I'll go back up. Here we go. So I'm looking for debtors. So 97,500. So I'm adding 500. So I received 1,000 of a debt of 1,500. So I'm adding 500. They're missing the difference in the two of them. It hasn't been paid yet, but it will be paid soon. So I'm going to add those two numbers together. So I'll be adding on. So now my debtors figure is 98. So I'll put that in here. So debtors is 98. Now I'm going to have bad debts recovered. So that's an add gain. So I'll put that up here in my gains. So obviously when we have a bad debt, that would be a distribution expense, okay? And sorry, that distribution expense, sorry, it's just down there. That figure there is for depreciation of vehicles, or I think it was hands. So normally if we have a bad debt, it would be a distribution expense, but because we got this money back, we're cancelling it by having an add gain. So 1,500 is the gain, the money that we're cancelling of a bad debt. So that's the first one. Check for 16.5 issued to supplier and enter the books as a wrong number. So let's go back down to this. So a check for 16.5, which would have been a minus number, would have made my bank account smaller, increased my overdraft. Have been put in as the wrong number. So I'm 900 out, so I need to take another 900 away from my bank account. And that fixes the bank part of it. The supplier then is a creditor. Now I notice creditors here. I've already done something with creditors. Okay, so 103,900. I'm going to when I paid a check. So I'm going to when I pay a check and I have to increase the value of that check by 900, which means I need to take 900 away from my creditors. I've paid 900 more off my creditors, so I owe them less money. Okay. Equals. So that's the figure now that I'm going to put in for creditors. So that's that fixed. A check issued to a supplier been returned. This had not been entered to the books. So that means I paid a check and maybe the check wasn't valid. Maybe I forgot to sign it, for example. So I need to add on to my creditors. So I'm going to start off my creditors again. So we have that number 104,800, and then that check. So if it was returned, I wasn't paying, so I owe 2,500 more to that creditor. So now my new creditors figure is that. So I'll put that in for creditors now instead. And then the bank, I have, if I've written a check, that means I've spent money, but if the check is returned, it wasn't valid. So therefore I'm going to add 2,500 onto my bank figure. A check for advertising 14.2 not been presented for payments. That means I wrote it, I put it into all the books, and that was dealt with, but the bank hasn't got it yet. So it's another minus, so minus 14,200. So I spent 14,200 more. So now what I do is I'm just going to add up the numbers that I have in the bank's version. So the bank statement should read 46.2 now of an overdraft. So what I've done now is I've corrected the two of them together. So that's the corrected balance. So that figure then is a minus. So I can put that straight into my current liabilities. Okay. Right, and that advertising check, I don't need to do anything with it because it was dealt with properly.